Today is 27th. We'll start with the Nifty trend. So today we saw that Nifty had a gap up opening and it is consolidating at this particular zone. So this is the hourly time frame. So again, once we look at the technical chart, we use the same indicator, the 50-day, the 200-day, and the pivot points. So what we are looking in the Nifty trend, if you look at the price action or if you see the candle size of the Nifty, it is still a bullish signal, right? So how am I telling this? One is, if you see the Nifty is currently trading above the 50-day and above the 200-day and also above the pivot line, right? All these three conditions are indicating a bullish momentum. And second is, if you see today, it had a fall, but there was a pin bar formation in the candlesticks. And also you can see the closing of the day was higher than the previous low it was created. So that is indicating a lot of people are interested to buy at this particular price. You can see that whenever there is a buying here, so that even if there is a fall, so there is a rally which is happening in the Nifty. So this price action is indicating still there is a momentum on the upside. So maybe we can see some downside. Maybe it can test 17,800, but definitely we are expecting it could break 18,000 for this expiry. Because of this, we shared the strategy for Nifty, that is weekly option, where we bought 17,900 call and we sold 17,950 call. We are expecting Nifty to go until this level. Maybe it can go up to this level. If we see the pivot line, it can test the center. It will not go below the 17,800. Maybe it can test this level, but we are expecting there could be some bullish momentum. There is a high probability. It's not certainty, but there is a high chance that Nifty can go up to 18,100 in the upcoming 2 or 3 days, maybe till the 30th of expiry. So this is what we're looking at Nifty trend by looking at the technical chart. So this is about technical. If you see the 1 hour time frame, right? If you see in the last week, we saw that Nifty took a small correction at the support level, but you can see as soon as the Nifty goes, even in the last few sessions we discussed about that, whenever the Nifty goes below the 50-day moving average, this is the area where you should look for going long. Right, this is a very sweet point for entering into the long positions for Nifty, maybe for equity, or maybe if you want to go for long in futures, this is the right spot. So from there, we are seeing a massive pullback in the Nifty. So even let's say, even if it goes beyond this and if it stays in this zone, this is the right spot for you to go long in the Nifty by looking at technical trend. So if you see this currently 1 hour time frame, we are expecting bullish momentum. Why? Because 18,000 is a key level. Right, a lot of people, I will explain you with the open interest data. A lot of people have created short positions at 18,000 level. There is a huge, close to 6 to 7 million open interest, which is short at 18,000 level. So what happens is, if there is a huge short buildup at this level, then even if Nifty goes near to this, maybe if it goes to 17,900 and above, these people will start panicking, right? Those people who have created a huge short position, they will be in panic, right? They will start to cover their losses. They will maybe sell the put option, or maybe they want to close the position and sell out of money, right? So this is what is the emotional game, what happens. So because of this, if it just touches above the 17,950 and all, there will be short covering and suddenly the Nifty will go up beyond that level, right? This happens, even it happened in this level at 17,000 level. We saw there was a huge short covering rally. Even at this level, it happened at 17,500 and even 17,000. So this kind of short covering rally, usually it happens most of the times, right? So what is short covering rally? If you see this 1 hour time frame, if you see here, this is the huge resistance zone, right? So let me just make it bigger, because this is a very important learning for today. Why short covering rally happens. So if you see, this is a huge resistance level. So the huge resistance levels will be always round numbers, right? 16,000, 16,500, 17,000 or 18,000. These are round numbers which will be there in the, it has a major significance in the market. A lot of people who are trading, they, who are the hedge fund managers, they keep their short or long position at this key level, right? If you see from the past 2-3 months, Nifty, when it broken the 16,000 level, there was a huge short covering rally. This is called a short covering rally because a lot of people have created short at 16,000. So whenever the Nifty touched this level, there was a rally, a gap up, and you can see it never touched this level. It had a massive rally, right? A lot of there are big fund managers, they were rolling over their positions, but it's very difficult to manage this kind of situation. So even if you see at 16,500 also, there was a short covering rally at this level. If you see here, there was a rally. It had a short covering rally, right? So even at 17,000 also, you can see on the month of, yeah, in the month of month end of August, you can see in the last week there was a short covering rally. So this pattern is being repeated over the last couple of months. So because of this, we are expecting maybe in the last week there could be some short covering rally in the Nifty, and it could break 18,000. That's a probability. That's high probability that it can go. We are expecting it could break 18,000, and it might go up to 18,100. This is what is the concept behind reading the price action of the chart. So this is about 1 hour time frame. Let's now look at how it is being traded in the daily time frame, because this is about the weekly options what we are analyzing. But for the next month, which is the October series, we'll see how the chart is likely to trade. So if you see this current trend of Nifty, if you see the candle size, it is having resistance in the daily time frame at 18,034, right? So whenever the Nifty touches this level, there could be some profit booking and it might consolidate, right? But if you see from the previous month, right, in the month of August, as soon as it has hit the resistance, there was a small pause, but again it went upside. At the closing of the month was almost above the upper resistance level. So there is a huge momentum which is there, and you can see the pattern here for the month of August and September. It's almost similar, right? So if you see here, Nifty is going up and it's taking a small pause here, and then is a rally, and also it's going up. Similarly, in the month of September, it got a rally, had a small pause, rally, and then. So how these patterns are being repeated? So one of the simple reason is these are all algo traded. Means the big institution traders, they are trading the market with algos. There are some automated trades which is happening in the buying, because manually they cannot place all these orders through equity, whether it is equity investments or whether going long in futures and options and all. Most of the times these are all driven by the algos, right? Because of this pattern will be repeated. You can see in the month of August also there was a rally, and at the mid of the month there was a pause and then was a rally. Similarly, in the month of September there was a rally and pause and again a rally, right? So this kind of pattern, you can see it's almost similar in the month of August and September, but it might not repeat in the month of October, right? So in the month of October, what we can see is, you need to compare with the previous database. If you see in November and December and in January, this is what has happened, right? If there was a 2 month rally, the market always moves in cycles. It will not be going in a single straight line, or it will not go in a flat direction. It will always trade in cycles. So in November it had a rally, in December it had a rally. There is a similar pattern. You can see in November also it had a rally, it took a pause, it had a rally, it took a pause, and also it rallied. So in December it had rallied, but there was a M formation which caused the market to have a minor correction. So we are expecting this kind of pattern in the month of September, right? On the daily time, sorry, in the month of October, that is the next month, there could be some slight rally, but it might consolidate, right? But you can see this consolidation is always higher than this previous. It will take support at the previous swing high. So what we're looking is, it will be in the bullish direction only, but we may see some consolidation. It could touch 50-day and take support. And also you can see, this is how you should read the price action or read the chart of any stock, whether it is any stock or index or whatever it may be. You need to compare with the previous data, and I would recommend always start with a daily time frame. If you go with a higher time frame, you'll be having a better accuracy in your projection, because these patterns will be clearly visible. So what we're looking now is, in the month of August it had a rally, even in September it had a rally. So maybe in the month of October we are expecting it could go higher. It could go up to 18,500. From there we can see some consolidation, and it could touch 18,000. This is a pattern what we're looking from the previous database. This is what is just purely based on technical analysis, purely based upon historical data, and purely based upon price action and all. We'll go with the open interest, and also we'll see what could happen. So if you're able to follow me on the daily time frame on reading the technical chart, because this is a very important skill you should have in reading the chart, because reading the chart is the first skill what we are teaching in trade psychology, and you need to identify this price action pattern. So it looks simple, but it's little tricky to identify this chart pattern. So Once you attend this weekly session over and over again, you'll be getting comfortable to learn these things. So if you're able to follow me on this, please do vote yes, so that I'll be able to understand. Okay, I can see that everybody were able to follow this. Thank you for voting. So this is very simple. You just have to go for daily time frame and just look at the price, how it is traded in the previous. You can see this was the biggest bull run what we're looking. So now, if you want to compare this bull run, a lot of people are predicting the top of the market. As we said in the last couple of sessions, we are not predicting the top of the market. We are predicting the support of the market. In this bull run, it's very difficult to predict the top because you need to compare with the previous data, previous bull run, right? So how to compare this? If you see Nifty, this bull run started close to around from the level of a lot of people are telling it is started from 7,000. No, it is not the bull run, right? So bull run will be considered where it took the support from this 200 day, right? It has started from around 11,000 level. From there, it had started rallying, right? This is called as bull run. And if you compare this from 11,000 to 18,000, it's almost 80% movement. It had moved from the past couple of 2 to 3 months, right? From that particular level. So if you compare this kind of move previously, it had in 2017. It was not a major bull run. You can see the Nifty had rallied from 8,500 to almost 11,000. If you take a difference, it's almost around 60 to 70%. This is how the bull run will be. And even in 2014, you can see where it took the support of it had took around 6,000 and it rallied up to close to 9,000. So it was again a major jump. This is how the bull run works in the market, and it happened. This kind of bull run, what we are seeing, right? We are seeing from 2000. Okay, from 2002, right? We had this kind of similar rally where the Nifty had moved from 1200 to almost 2000, right? It was a significant 120% gain in the Nifty, right? This is how the bull run worked. You need to just compare with the previous data of Nifty, and if you see how this bull run will end for Nifty. For Nifty, we are looking at a similar pattern, right? If you see and see the current bull run of Nifty, it is going straight, right? It is not similar to 2008 or it's not similar to 2014 and all. 2014 and all, it was a flat rally. It was not a straight rally. So now what we're looking is Nifty, we cannot predict the top, but we can expect there could be some choppy formation, right? Once we are seeing the lower highs in the Nifty, that is where we can consider there could be some correction in the market, right? So this will take time. It will not. It will take another 3 months or another 6 months. We don't know, but we are expecting Nifty could go higher, and we could see the swing lows. From there, we could see some reversal in the market. But it is currently what we are looking is we are not at the end of the bull run. Maybe we are at the middle, or maybe at the 60% of that particular bull run. So we may expect further rally in the Nifty because considering the current holding from fyers and all. So this is how you need to read the market, and this run, a lot of people are telling it is means when you go and do a research and all, a lot of people will be predicting it's a bubble, it will crash and all. But this is what the bull run will look, right? It happens for every 3 years. For every 3 years there will be bull run, and after that there will be consolidation phase, and there will be some minor correction for 6 months, right? This is how the cycles of market work. So you should be, as a trader or an investor, you should be knowing this basic fundamentals, that how the market behaves, right? It will be having the 60% of the times the market will be going upside, maybe 20% it will be sideways, and 10% there will be correction, right? It is 60 here. This is 60. There is one rule called as 60, 20, and 10, right? This is how the market works. The correction happens very significantly. Maybe within 3 months or 6 months, the correction will happen. But 60%, the market will always be going upside. So this is what is a historical price action and all. So I hope you are clear with the technical. So let's now move on to the open interest for Nifty.